Can you use a VA home loan to buy a home that needs repairs? The answer is yes. Can you use a VA home loan to finance repairs? Again, the answer is yes. That is the VA Renovation Loan, or VA Reno Loan. My name is Michael Florin. I own Low Cost Mortgage, and this is going to be an instruction video on the VA Reno Loan itself. It's good for realtors, it's good for buyers, it's good for home owners, so that way you understand your options when it comes to a VA Reno loan. I've got notes here that I'm going to go through. This video is probably going to be a little bit dry. I'm going to shoot it all in one take, so that way we can cover kind of the summary of it. In all reality though, you are going to want to call us and discuss your specific project, and then we're going to let you know if it can or cannot be done. So I'll go ahead and make sure the phone number is on the bottom through the video, but that's our general number. If you dial extension 1, then you'll get to a loan officer and we can walk you through it. If you've got my cell phone, you can just call my cell phone too. It's fine as well. Okay, so VA Renovation Loan. It's used to purchase or refinance. So you can, as a realtor or a home buyer, you can buy a house, you can use the renovation loan to fix things like a sewer system or a septic system. You can use it to make the house wheelchair accessible for disabled veterans, et cetera, et cetera. There's a list of things you can and cannot do. We're going to go in the list at the end. On the refinance side, same thing, but now you're refinancing the house. So you take your current VA loan and you refinance into the Reno loan, and that finances the construction of the project, okay? There's going to be some main considerations. First and foremost, this is not a new construction loan. It's for renovations. That means that, can you do an addition? Yes, you can. And there's kind of specific rules in there. And the easiest way to explain it is this. If the loan amount of repairs, not loan amount, but the cost of repairs is going to be 100 grand or less, it's one set of rules. And those rules are pretty easy. So for example, you want to add a detached garage, or you want to add wheelchair ramps, or paint the outside of the house, or septic system, or roof repair, or any of those things, or a combination of, and there's more. But if the total of all those together is less than 100 grand, easy, simple, goes through pretty quickly. It's a different process if it's between $100,000 and $200,000. So between $100,000 and $200,000, a little bit more work is involved, a little bit more double checking of things, but it's still fairly easy. It just takes longer. Once you're over 200K, then the investors need to review the project. But there's kind of a caveat there. If your house is worth 400 grand and you're trying to do 300 grand of repairs, it's probably not going to be able to be doable. But if the house is $1 million and there's $240,000 of repairs, most likely that project is doable. So if it goes over 200K, it has an extra layer of review, and that extra layer of review is going to really examine what is the current value and the future value of the project, and at the same time, what is that dollar amount for rehab in relation to the total value of the project. For example, you can't buy a 200K home, put $300,000 of work into it, get a 500K home. No one's going to finance that. VA allows it, but none of the investors will do it. Therefore, it can't be done, if that makes sense. Again, give us a call with your specific project. Now, process flow is the following. We're going to go buying, and then we're going to go refi, because refi is similar to buying with a few changes. You're buying a house, you and your realtor find a house. Realtor needs to run comps, not for us, but for you, to make sure that the future value is there. We need to know roughly what the future value is, but we'll get into that step a little bit later. Find a home, it's got equity. Maybe it has 100K of equity, but it needs work, okay? Needs a kitchen, needs a roof, needs a septic system replaced. All of that together is, say, $99,000, okay? Get the house under contract. We want 45 to 60 days. Under contract. And the reason is we need some flexibility, we need some time. This is not going to be a 2-week close. This is not going to be a 3-week close. This is going to be a 1.5 to 2 months. And the primary reason for that is the following. The next step, the scope of work. Once it's under contract, you're going to get with a contractor, but not any contractor. You're not going to grab your cousin. You're not going to grab anybody you find in the internet. You're just not going to do that. There's a list of HUD-approved contractors, and those contractors have already been through the financial audits. They've already been through the background checks. They've already done work within the confinement of the system, so they are the ones you want to use because they're going to be fast and efficient at getting the documentation and paperwork in to get the loan done quickly. So you can use another contractor, but they have to then go through that entire approval process. And I've been through that before for contractors to get approved. It's a mess. And if that contractor doesn't have a CPA, if they don't have clean books, if they're not profitable every year for a few years, they're probably not going to be approved, and you just wasted several weeks of time. So to save you time and money, you need to use one of the contractors that's on the HUD list. We have access to the HUD list, so we'll end up connecting you with some of those contractors, and then you get bids with a few of them, okay? With that being said, so you're under contract for roughly 2 months. The extra layers on a normal purchase contract is going to be the contractors come in, they develop a scope, they develop a cost of work, that gets submitted to the underwriters. Underwriters review the scope of work, and then an appraisal is ordered. And now appraisal is ordered later in the process on a renovation loan. On a regular VA loan, it's ordered towards the beginning of the process. But on a renovation loan, it's ordered after the contractors have their scope together. So it's going to be ordered week 3 or 4 sometimes. It's going to be ordered much later in the process. With that being said, the appraisal is valued on the future value after the repairs are completed, not the appraised value today, okay? So that's the big key thing. The future approved value, or the future value of the home, is going to dictate how much money you have available. So if the project, we're going to use round numbers for this entire process, okay? You're buying a house for $500, there's $200K in repairs, and the future value comes in at $800K, you're fine because you have an extra 100 grand there. But if the future value comes in at 600 grand, you're not fine because you have 200K of repairs and only 100K of extra value. If you know what I'm saying, you know, and if not, just call us. Okay, we'll walk you through that part, okay? After appraisal is done, getting clear to close and moving to closings actually fairly quickly, but again, the appraisal is happening towards the end of the scope of the project. The other main bottleneck is going to be insurance, because insurance needs to cover current, and then of course later it's going to cover future value, but the repairs are going to be newer. So for example, if the renovation loan is doing a new roof, that a lot of times will lower your insurance, okay? Now, refinances. All of that for purchases is the same for refinances except the following. You don't have sellers to deal with, you don't have listing agents to deal with, you don't have realtors to deal with as well. So it's you, us, contractors. That means that that whole system moves as fast as you want to move, but it also moves as slow as you move if you're moving slow. So I've seen renovation loans move fast on refinances and purchases when everyone's moving fast and you're closed like roughly 30 days. I've seen it where it takes 2.5 to 3 months to close a Reno loan because people are dragging their feet. They want to use their cousin to be the contractor. The borrowers aren't getting documentation in, et cetera, et cetera. Point is, if you're fast on documents, you're fast to talk to the contractors, you're fast to do things, this whole thing is fast. If you're slow, this whole thing is very slow, okay? Now, what's nice about that though is when you're buying a house, you can buy a house that has the typical issues, but now you can finance it, which is cool, which is actually really cool. Okay, so we're gonna categorize this because there's a breakdown of below 100 grand, over 100 grand, or easiest way to categorize it is this. 0 to 100 grand is one set of rules. 100 to 200 has extra rules, and 200 plus has that extra management review, okay? So we're gonna talk about what you can do if you're under 100,000, okay? First things first, you want to renovate the bathroom or the kitchen. You can do that under 100 grand, pretty easy to do. You can convert a multifamily home, 5 units, 6 units, which is now commercial, right? You can do a residential multifamily home, 2, 3, 4, 5, 6 units, and move it down to 1 to 4 units. You can also take a single family home and move it up to 4 units. You can take a threeplex and move it down to 2 units or make it a single family home again. This is going to come in handy on those bi-levels that you either want to live on one level and convert the second level to a second unit. It's possible for that. Also, you move into a house that was converted into a duplex and you want it to be one single home. You can use the VA renovation loan to do that as well, okay? You can remove health and safety hazards. So for example, you can use the renovation loan to remove lead-based paint, mold, things of that nature, say electrical coverings, things of that nature. You can also upgrade your HVAC, electrical system, heating system, plumbing. You can upgrade or repair those with the renovation loan. So for example, you have old cast plumbing. You can use the renovation loan to upgrade it to PVC if there's an issue. Maybe it's collapsed, maybe there's roots in the line or et cetera, okay? You can, if it's under 100 grand, you can do a new well and a new septic system. And I categorize this in repair and or replace because usually you're repairing first. So if it's a well or septic system or sewer line, you look at cost of repair and then you look at cost of replace. And you got to be careful because if it's over 100 grand, so if it's the 100 to 200 grand, at this time, you can't do a new well. And at this time, you can't do a new septic system. So, but if the cost is below 100 grand, you can do a new well and you can do a new septic system. So this is where the details are going to get a little bit, this is where it's going to be better to call us for things like that, and we'll walk you through that process flow, okay? Interior and exterior painting. One of the major call-outs on a VA home loan is chipped and peeling paint, or there's no paint on the entire house outside. You can do the VA renovation loan to buy a home that has chipped and peeling paint, and the deck is falling apart, etc. You get the bids from the contractors, you do that scope of work correctly, the value is there, you buy the house, and the contractors will paint the home and repair the deck, which is good, very good. But that allows the VA loan to buy homes that you typically couldn't buy before, okay? You can do major landscaping, and this is kind of vague, but you can do landscaping that's going to improve the value of the home. You cannot do landscaping that does not improve the actual dollar value of the home. So for example, you can't have a mural painted on a wall because it doesn't increase the value of the home. You cannot do fire pits, you can't do barbecue pits, you cannot do those, but you can do exterior landscaping that does. So like for example, exterior kitchen is most likely going to be fine. If the landscaping is in such disarray that the minimum standards are needed for the subdivision, that's possible as well. But this part's kind of vague, which is landscaping that adds permanent value to the house. We have to talk about that on the phone, okay? Major structural alterations. Again, there's a break point between 100K, 200K, and over 200K. If it's under 100,000, you can do those structural repairs. You can do the foundation repair, you can do those things if it's under 100,000 of total repairable cost. If it's over 100, say 100 to 200, you can't. The investor that'll do under 100 is different than the investors that are going to do 100 to 200, and if it's that much repair work, it's out of the scope of the VA. Right? Now you have too many problems that potentially could arise in the future, and just better to find a different home. Okay? You can do additions. Additions, adding a bedroom, adding an extra room, expanding the garage, etc. You can do that under 100K. Over 100K, you cannot. Okay? Now, replacing flooring and appliances. You can replace appliance and flooring. You can. Roofing, gutters, and downspouts. So your roof is trashed. Insurance won't cover it. It's going to be $40,000 to fix it, whatever, insert number here. And you want to do gutters, downs, and typically if you're doing that, guess what you're doing? You're also painting the outside, probably repairing decks. You're probably doing a complete exterior work on the home. If that's the case, it's possible. You can do roofs, gutters, downspouts. And then again, if you're doing that, most likely you're going to be painting some and you're going to be doing some other stuff. But yeah, roofs count, okay? You can repair a swimming pool, but you cannot install a new pool, okay? You can't install a new pool or tennis courts. I don't know why they called out tennis courts. I can't think of any place where people are thinking, I want a private tennis court, and they can't self-fund that, which is kind of interesting. Okay, you can put weatherization on the house. So weatherization is like storm windows, storm doors, extra insulation, weather stripping. All of that is in the scope of a VA renovation loan. All right. Typically insulation, you're adding that through the renovation project, but any insulation work, again, can be added into the loan. Okay. Now, there's one note on well and septic. And that is the well and septic system need to be repaired first before any other repairs are done. It's just a caveat in the rule set. And of course, windows and doors can be replaced with new windows and doors. So if you're buying a house and it needs all new windows and it needs new roof and it needs paint and it needs a new deck and oh, you need wheelchair access to it, guess what? VA renovation loan. Probably just fine buying a house with that. Depends on the house, depends on you if you can afford it, what's the future value. Again, it depends, okay? Not able to be done. Okay, so this cannot be done. The VA home loan is a residential home loan. It's designed for a single family home or up to 4 units like a fourplex where you live there, you actually sleep there, okay? With that being said, you cannot take this loan and use it to convert a regular house into a commercial building where you're selling merchandise. You can't take a big house and convert it where the main level is a store and then you live upstairs. You can't do that with a VA renovation loan at this time. Maybe that mixed use might change later, but for right now, it cannot be commercial. You cannot modify the building to be commercial. Now, you can take a building that is commercial and modify it to single family. And this is an example of where this probably could work. And I'm saying probably and could, because it's going to depend on the house. A lot of times these old Victorian homes are turned into apartment buildings, sort of. So it used to be a single family home and now it has 4 or 5 or 6 units. Well, there's a legal difference between 1 to 4 unit, that's still considered residential. But as soon as you add a 5th unit, a 5th studio apartment or a 5th 1-bedroom apartment to that building, it is now commercial. Well, you can use the VA home loan to take that 5 unit, used to be a house, convert it into multifamily. It has 5 units and now you can use that to convert it down into 4. That's possible. And again, it's going to depend on the house, making sure the value's there, et cetera, et cetera. Again, you cannot do barbecue pits, outdoor fireplaces, things like that. You cannot do hot tubs, saunas, spas, whirlpool baths, or anything like that. The caveat would be is if it's part of your disability where you have to have it for yourself to use on a daily basis, that's possible, but at the same time, companies that sell hot tubs have their own financing, just like pools and tennis courts, they have their own financing, and it's better to finance it through them away from the VA home loan, all right? Let's see here. Oh, television satellite dishes. If it's they don't really have television antennas anymore. They used to, but it's still part of the guidelines. Satellite dishes, again, that's part of just getting TV or internet. They install the satellite dish for you. VA Reno loan won't do that. And tree trimming or removal. The VA renovation loan will not cover trimming trees. But again, there's arborists out there that'll do it for, $500, $600, $700, $800 or something like that. So if it's tree trimming or removal, got to do that on your own. Maybe the contractor you're hiring to do the deck also does that on the side. Who knows? Who cares? Each situation is going to be a little bit different. So with that being said, that is VA renovations. That's kind of a quick verbal breakdown on our webpage, which is lcmloans.com/VA renovation home loans. There'll be a link here in the description on the YouTube video, but at the same time, you can go to our main website, and I added it to the top categories on the top, purchase, refinance, or renovation. It's in the drop downs there, but you can find it there as well. If you have questions, call us. Phone number is across the bottom here, so you can call with any questions. But VA renovation loans, in summary, it's going to take a little longer than a purchase. It's got more flexibility than a purchase, but you have to make sure that the value is going to be there when the repairs are complete. So for purchasing, this is going to be for a house that has equity in it already, and you need to just make the house compatible with VA guidelines. Then for a refinance, if you've been there for 5, 10, 15, 20 years, you probably have the equity already to pull it off. All right. Anyways, my name is Michael Florin, owner of Low Cost Mortgage, military veteran, and this was a quick video of VA renovation home loans and how you can use them to finance your project. Have a great day. Talk to you later. Bye.